All right. Welcome welcome all to another Pinnacle webinar. Guys, I'm super pumped as always for this one. First and foremost, if you're watching this on record, drop comments throughout if you have any questions in relation to what we're talking about today. Don't forget to subscribe and turn the notifications on to keep up to date with these free webinars all of the time. And as I've mentioned again, like, don't be afraid to comment. If you have any questions, we go through all the comments on every platform always, and we'll always reach out to people should you have any questions at all. Today's webinar, the topic of tax time, is definitely going to be one where there are lots of questions, so feel free to ask. All right, we next are going to welcome our new members. We have a short list. Everybody wave here. Let's wave. Give the new members a welcome wave. Denise, which is you, so welcome Denise. Jade, Cheng, Ketia, Tim, Gavin, and Mark. I think a few of you guys are here, but any of you guys that get tagged in this little segment video, these are here. They're for anybody to attend live. We pack these full of value. They are straight to the point, no fluff. Ask the questions that you want in relation to anyone that is a personal trainer, face-to-face in the fitness industry. Any questions about anything, tune in, attend, and get your answers. And it's that simple. With that being said, let's move through now into new announcements. Finally, the onboarding document is live. Thank you, Tane, for giving us yours and your processes, bro. We obviously took some of them, stripped them back, and simplified an onboarding document. So for a lot of you guys, especially now that we're getting the content in Pinnacle quite detailed and structured, there's obviously a lot of things that we need to tick off the list when you onboard new clients. This onboarding document is now uploaded into stage 2. This helps you onboard your clients thoroughly to your businesses and make sure that you get everything ticked off, everything you need, from accountability to the value that you're offering them, to MyFitnessPal and any training that you need to go through with apps such as Trainerize that you're using or anything. Just making sure you don't forget anything with your clients. So that can be found in stage 2. That's new content. I'm sat in this hotel room at the moment finishing strike content. There will be a lot of new strike content coming. I think everyone knows what strike is now. So that's that. But yeah, use the onboarding doc, guys. As always, the webinars from last week, they're uploaded, especially the marketing webinar. For those of you guys who are new here, so Denise, Mark, straight after this, we have a webinar on marketing. I'm looking for stage 2 stuff off you guys currently, right? To get up and running with all your systems and packaging and pricing. When that's done, there's a lot of guys here that are crushing it with their lead gen. So we launched a strategy last week, 7 days. I think we've had 100. Wait, Glenn and Claire, you guys have got what, 120? Was it roughly, you say, leads?
Just getting
there you go. There you go.
152.
152. Jesus. 152. All organic leads. All from a gym. Yeah, collectively. Even if you split that down the middle, 75 each is solid. So I think you guys are probably front runners at the moment. So yeah, Mark and Denise, and I can't see behind my phone. Anyone else here that's new? Don't think so. No, feel free to come along to the next webinar. Straight after this, the link for it is inside the webinar in the marketing marathon section, just below this, just below the weekly Q&A segment. Have you seen it in there? Do you want to come along? It's completely up to you anyway. But if you need the link directly, just message me and I'll send it to you. So that's that. All right, today's topic, guys, is end of financial year, EOFY, tax time and accounting. Basically, there's no structure here. This is probably the most frequently asked questioning that I get collectively around when it's a topic where loads of people have questions. We know what you lot can be like in here. Sometimes you're full of questions, sometimes you're not, but ask away, basically. There is a lot of questions to ask in relation to tax time. So we shall get stuck in. Otherwise, I will basically freestyle this one. Tax time questions or anything Q&A. Let's combine it today with our Q&A segment. So any questions about anything to do with business? If not, just tax time questions, fire them at me and let's get it going. This is great. I can go. Always the same. Someone's going to say something soon. Claire, is that you?
Yeah. All right, I have a question. So
Cool.
regarding, because obviously I do like compete. So is every kind of expense that goes through the competition classed as kind of personal development? Because obviously making sure that I've got that kind of physique is building our business essentially. Because I was like, I'm just wondering if I can put those through as tax deductible items.
Yeah. So I'm just, can everyone hear me like smooth? Am I okay? Am I smooth? Yeah. Okay. So right. First and foremost, the fitness industry is one of the best industries that you can be in for claiming tax or claiming things and writing things off. It's super, super simple. Thanks, Zach, as well, because that was the same with me, mate. So yeah, if you guys are competing, obviously we've got some athletes here today, like you competing, anything like that, all of that is tax deductible. Everything you think about it, it is really self-explanatory. Like everything that it comes down to, even if I'm looking at my Apple Watch over on the TV on the table over there, that's 100% write-off. Okay, so you like it's 100% write-off. It helps you track XYZ while you're taking XYZ sessions in your business, right? Supplements are always a write-off. All of it. It's 100% write-off. Your clothes, everything that you're wearing, most people are wearing active wear, gym wear, whatever, the whole time you're representing your business, 100% tax deductible all the time. Everything pretty much, Claire, is tax deductible. I think the question really that I would counter with is like, what's not? So the only thing that that's not tax deductible is if you want to, you can claim percentages of your rent at your house, right? So this is definitely something. And again, accounting wise, guys, if anyone wants to be connected, I connected about a dozen of you guys with the accountants last week. Did you have your call with them in the end, Claire, Glenn? You sweet with, yeah, okay, sweet. If you need the best accountants, I've been through many to get to these people. I have them. All right. So just if you want them, just send me a message saying, it's like send accountant or introduce accountant and I'll do it. What can you not claim? So yeah, your rent, you can claim, but ideally it's always a percentage of it because working from home office. So 50% of your rent, you can't claim 100%. Depends on your turnover though. It depends on the structure of the business. Like a lot of you guys, you might have equipment at home. You might have sessions being taken from home in some circumstances. Therefore, you could try and get away with claiming 100% of your rent. I mean, I do. I personally claim everything. I put everything through the company, even though it's a bit naughty, but we have good accountants, right? So that's it. And if it saves you money, that's what we want to do. Everything vehicle expense wise, 100% write-off, everything, all of it. Flights, anything like that. If you're traveling to Miss Fitness Australia to compete, for example, right? Denise and Mark are they're hosted. How would you even say what you are, guys? Would you be the main guys for that event?
The technical term would probably be promoters.
The main promoters for Miss Fitness Australia in the house. There you go. So look, if you're flying to an event like that, right? Or Claire, if you're going to Vegas, which is our goal next year for the Worlds, right? Like that's 100% tax deductible, all of it. Whenever I travel anywhere, it's always write-off. I mean, luckily we have clients in a lot of places. If I've got one client anywhere, I have to go and see that client, right? That's what.
Can we make?
Yep.
So would that be tax deductible for two people, part of the business?
Of course.
For me going to Vegas?
Everything. You're there as support. You're her coach, right?
Yeah, I am.
So there you go. Like again, there's levels to it. There are levels to it. So you can't, like, from my friends that work in the construction industry and they do a lot of turnover, like multiple millions a year. There's levels to it. You can't just go fly first class around the world 24/7 and claim 100% of that. You can't, right? So you can't do just spending the company's money, but domestic flights, once-off internationals, anything like that, guys, 100%. And if you are genuinely doing business in these places, 100%, all of it. There is not much, in short, Claire, that you cannot claim at all. It will come down to your accountant. It will definitely come down to how good they are and their expertise. and how much time they put into you. And it's that simple. So hopefully that helps. Great first question. Hopefully this will probably snowball from here. Yeah, there were a lot of questions last week. I mean, everyone said they wanted to do a tax webinar. So questions, more questions, and good to see some other people as well. So Rai, good to see you. Erin, good to see you. Cam, too, good to see you. Anything tax time related?
On that,
yeah.
With our business, obviously because we're working out of a gym, we have our base location, the gym's location. Should we be having that our house for these tax purposes, or keep it at the gym location? Is there any obstacles overcoming if that's where our business is registered from?
No. So I mean, look, it's a great question, Mark. Like where the business is registered to, basically using that as the home address to claim stuff from is pretty much what you're saying. Is that right?
Yeah.
Yeah. I wouldn't worry too much about where your business is registered to. Like at the end of the day, it's going to come down to like, look, are you realistically getting audited? The answer is no. You're not. The tax authorities are never looking into people that are making less than, depending on their accountants, depending on how they're structuring everything. I've never been audited. I don't know many people, if any at all, that have been. There may be one or two clients, but if you're making less than $250,000 a year, I wouldn't worry. So 5K weeks, I would not worry. Unless you're making 5K a week and all of that's getting transferred into your personal accounts, and Denise likes buying handbags at Chanel every 2 days, right?
I had in the past, like
legit
last
question.
year. Last year was kind of like that for a week. At the end of the year. So I'm hoping this year will be the same.
Yeah.
So good to be aware.
100%. But yeah, I don't. They're never going to look into like where is it registered. Let's look at. If you think about it, these auditors, and this is a good way to look at it, guys. Like it's a good piece of value. This one, if they have someone who takes your account on to audit it, that person's getting paid a wage, so they need to fund that person straight up, right? So if your tax bill is 5 to 10K, right, which it could be for a lot of you guys. Like with that being said, are they going to pay the wage of someone to audit you to go in to break even? No, they're only going to come into people that are either abusing the system, and again have bad accountants, right? Or just people that are stupid and just spending everything, not paying any tax, and just racking up a load of debt, so that it's a big red flag. So I would always say register. To give you a good answer though, like I'd say register the company's operating address to your home address, because it goes without saying that you're operating and paying money to RideAware to be inside the club. Your rent goes without saying that that's another location that you're operating your business from, because it's the gym. But if you register, I always register my businesses to a home address, because then again I can claim the rent through that address.
Yeah, that's what I'd been doing previously, but then with the insurance wanted to have the gym's address, so that's why I thought I'd double check.
Yeah, insurance will, but for tax times and stuff, for that, in that instance, it's not too much of it. But it's a great question. But yeah, as you grow the business, as it scales, 100% for sure. Questions? Anyone else?
I just missed that part, brother. Did you go over receipts and keeping receipts then?
It's a great question. Great question. So anyone here who has an accountant that asks you to keep receipts is stuck in the past. They belong with the dinosaurs, right?
Perfect.
It literally is that simple. You do not ever need, I think, I don't know whether it was Aaron here. I was speaking to you, brother, about this. I don't know whether it was your old accountant. But I have a lot of people that speak to me and say, like, I need people that say I need invoices, for example, for the payments that you guys obviously make to Pinnacle for the consulting. You don't need any of that. Realistically, you don't. I'm more than happy to give them to you, but if your accountant's asking you for receipts and invoices and stuff like that, they're not up to speed with the 21st century. Basically, like it's like you need to be in a position where everything's ran through an accounting software. If hands up if you've got a registered company here, so PTY Limited. So there's a few,
Yeah.
There you go. So if you're PTY Ltd, a proprietary limited, or an LLC for Ryan and Cam in the States, I think there was, yeah, Cam's here. That's right, LLC, I think. Is that right? No? Is that two? Yeah, it is. Basically,
LLC, yeah.
It's LLC. Thanks, Cam. Yeah. So you instantaneously, I've lost my train of thought. What were we saying here? You instantly have to be running accounting software. Legally in Australia, you have to run accounting software. Basically, accounting software hooks up these things with your accounting software. All the transactions that go through that, they're all tracked. They're designated into categories. The only thing that accountants need is proof of payment, and that is your bank accounts. That's all it is. Like, I remember when I was trying to collect receipts from Bunnings, like for another business, and like they were like fading, and it's like keeping all this stash. I had a bag of them, like just chuck it all in a bag, and then I'd have to sit down and accumulate them all in a spreadsheet. Like, man, those days are gone. Like they're well and truly gone. The accounting software does all of that for you. Yeah.
You'd rather get audited, brother. You'd rather get done than do all that, I reckon. Eh? Like, that just sounds horrible. Yeah. That's
the thing. I think, like, in general, then, if you're running accounting software like Xero, or I think MyOb, it's like the first one that came out like 10 years ago or something, there's an element of credibility to the business. Like, you're not doing things manually. You're not getting your tax done by H&R Block. Never go there if you're in Australia. Do you know what I mean? There's a lot of these sorts of companies that, you know, they get people to come to them because, oh, we do tax returns for $100. Like, I'd rather pay 1,000, even though it won't be. You'd normally pay with a good accountant. Individual tax returns probably about $250. You pay that, right? You pay that money, they're going to get you 3-4 times the money back. But a lot of people just think on the front end, oh, well, it's costing me $100. I'll go with them rather than 250. Well, I'd rather make $4,000 in the back end rather than one, or save $4,000. So yeah, use accounting software, bro. No need for receipts. 100%.
With my accountant, all I do, if I've got something I actually need a receipt, if I go and buy something random,
yeah,
I just take a photo of it, email it to him, and he loads the receipt directly into the accounting software.
Yeah,
and nothing ever fades on you, and it's always there.
That's another good thing. If you want to protect yourself, again, it's a great way to do things. And look, again, is it better to cover your ass? Of course it is, you know, of course. And having photos and stuff like that, just easy. Create a folder on your phone if you want to cover yourself, and just every time you buy anything, just snap it. But you'll find a good accountant will never ask you for receipts.
I think as well, for the guys that have just started up, they're in the call, the best thing that I did was get a bookkeeper, and that she's actually with the same firm as the accountant, as Simon's guys. It's so cheap as well. Like, she's done everything, and I ended up paying with the BAS and for their fees, it was something like $200 just to manage my business, which is nearly at $250K or something like that. Because I suck with numbers and I was stressing about that, but just having everything covered, it's such a lifesaver for sure.
100%. The bookkeepers is what, again, if you struggle with that stuff, hire a bookkeeper. There's no, like, you can get one. Does anyone need one? No, you don't. But if you want it for peace of mind, exactly like Tarkin, you suck with the numbers for the sake of a couple $100. Again, all of those fees, all of your accounting is all tax deductible, all of it. That's why, like, anyone looking for a good accountant, you are far better off going to a good accountant, because why? Their fees are tax deductible. All of it's tax deductible, like everything, like it just compounds. So how does this work as well? Just to sort of like dummy proof it, when things are tax deductible, it doesn't mean that you don't have to pay for them. That would be great if you didn't have to pay for them. But it means that if your outgoings and spending on money is, say, 30 grand a year, call it, right? If your tax bill's 25, well, you're writing all of that off, and they're going to give you 5 back. That's how it works in dummy form. So yeah, again, it's good to spend company money, and there's a lot of when you're getting up, like, I mean, Tarkin's had some astronomical business growth, so from scratch to nearly 250K in what, bro? 6 weeks, I think, 7 weeks max or something like that.
Yeah, 7 weeks, I think.
7 weeks, nearly doing 5K a week in that time. Like, it then comes a point where you need to, like, watch out for spending money, and you need to be spending money to save yourself in the long run, which is where it gets fun. but the fun part for us is getting you to those levels, right? So that's what we got to do. Yeah, cool. Questions? Anything else?
I've got a question, Simon.
Yes, Erin. Yes, darling. How are you? Hopefully you're good.
Yeah. Hey. Good, thanks. So I just want to ask about like GST. So
Yeah.
I'm not obviously earning enough that I need to pay it, but like in the future I will. I'm just wondering, like, how does everyone else kind of do that? Like, I'm gonna start charging people GST, but do you guys just like put it aside because you're gonna pay it eventually, or like, I don't know, like, how does everyone handle it, I guess?
It's a great point. I think I'll start by just saying just charge it, and you can put it aside. What I read in terms of putting the things aside, and this will probably answer your question as well. A lot of people always ask, like, in terms of tax time, like I need to put aside 30%, right? One thing that's really common as well, right, is that the more money you make, the less you give a shit about the ATO and the tax authority, the more you don't like them, which sounds horrible, but it is the truth. I don't care what anyone says. The less money you make, the more you're worried about them and the less they care about you, right? So what I wouldn't be doing is I wouldn't be putting a ton of money aside when you're growing your business. And we've just moved into a new location, so we're starting to grow. I wouldn't be worrying about putting GST aside before you're before you even registered for it. I wouldn't be worried about putting any tax aside at all as well. I just wouldn't. There's no point in doing so. And a lot of people think, well, what? So you don't want to pay tax? It's not the point. When you get to tax time, it balances out in a way that basically you'll probably get money back. So, excuse me. So you're at a point where you've put yourself through hardship financially when you're getting off the ground, which obviously with us doesn't take too long, but the extra 2, 3, 4 grand or that you've put aside over the course of a year would probably be a lot better off in your pocket rather than, trying to save it for someone who then gives you money. You know what I mean? In terms of the GST stuff as well, Erin, like last week on the marketing seminar, we did the GST price rise strategy. Check that out if you weren't there. I can't remember who was there and who wasn't, but
I think I saw that one. Yeah, I think I saw that. Yeah.
So yeah, I mean, like you want to go on. Sorry.
10%, the 10% increase, wasn't it?
Yeah, the 10% increase. This email has it's highly valuable. It has like a 95% success rate where people just won't batter an eyelid. They'll just pay it because of how the email is structured. So it works. We're going to talk in the marketing loop webinar after this one about who's implemented that. So we'll save it for then, but implement that. And you need to be charging like 55 plus GST for your half-hour sessions. Everyone here is well and truly able to be charging 100 plus per hour, and that's the benchmark. Structured the way that we do it at Pinnacle with your golds and silvers. So yeah, hopefully does that answer your question, Erin? Hopefully that gives you a bit.
Yeah, that's awesome. Thanks.
That's good. No worries.
Hey, Simon, I got a question.
Yes.
Can you hear me, Simon?
Yes, Glenn. I am. Yes, I'm looking for you. There you are.
So we're sharing the Bluetooth.
Yeah.
So Claire and I haven't done our 3-month BAS statement. So we haven't actually paid any tax. If you haven't paid tax, how can they give you money back?
Because it all depends on how it's structured when your accountant claims and puts in what you've paid. So like, again, your rent to the gym, first and foremost, for 2 of you guys paying rent to Good Lives in 2 locations.
35 a year.
Right. Yeah. That instantaneously is you paying tax. So that's the way I would look at it, because that's full write-off, right? So I would look at it that even though that's gone to Good Life, well, technically because the ATO structures things in a way where they allow you to make these write-offs, it's paying 2 people, even though it's going to Good Life, that's saving you on tax. So you won't need, this is the thing, you don't need to pay tax in order to get a rebate, which is quite weird. Does that make sense? Like you don't need to, like you don't need to pay the ATO 5 grand for them to give you back 8. They'll just give you the 3, which is the difference. And it's all done at tax time. So when you put in, I paid 30K for rent for me and the missus, and you do your tax together, which is again something that Dave will go through if he recommends it's beneficial for you. Then yeah, you've already got a 30K head start. You chuck your consulting on the top, you chuck your supplements on the top, you chuck in your world title in Vegas on top. Like you know, like this is the sort of stuff here
Trips to Adelaide.
yeah. This is again. So that's what I was going to say to you, Glenn, as well. When you go see family and you travel interstate, brother, like it's all of it. I've got an online client there. What do you, right? That's it. But I go to Adelaide, and you know Nathan's there, Mark and Denise are there, and others. We've got a good few in Adelaide. That's your excuse, right? But yeah, hopefully that makes sense. You don't need to pay. Like again, a lot of people are so scared of the tax authorities and the ATO when you just really don't need to be at all. And I mean, for me, I always say this, it's, we call it a little bit blunt, but they get paid last, guys. Yeah, they get paid last. You get paid first. Don't break your backs when you know you're getting off the ground. And yeah, Ray hasn't done her tax in 2 years. I haven't paid the ATO in about 2.5.
Yeah, when I get my tax bill, I push that sucker until they come chasing me for it. I'll pay that next time. I'll pay it later.
And honestly, it's it's good to see everyone laughing. This is the way you need to be with the ATO. At the end of the day, we've tried everything. Like a lot of people out there, everyone knows. And I asked the accountants this: is there any way that I can avoid these people? Right, basically, and the answer is no. Now, you cannot avoid them. So what I would do is focus your whole heart and all of your energy into growing the hell out of your business, right? So that you are making that much money that you can pay them their cut, and it does not matter at all. But also have a good, you can see why now having a good accountant is very, very important. So they save you a lot of money, because I've had accountants myself that haven't. And yeah, I'm good. I'm glad, because it's a life lesson. So yeah, and the ATO gets paid last. The tax authorities get paid last. I mean, you guys in the States as well, like Ryan and Cam here that are here today, like you guys have a pretty harsh system over there, I think, with like a lot of stuff. Do you know what I mean? I think over here it's also, you could call it as harsh as you want to make it. But if you need to know you're not going up against a beast who's going to bite you in half. You're not. But people are just scared. There's no need to be scared. No need to be at all. So hopefully that helps. Anything else, people? This is good. All right. So look, we're doing well here. I'll switch it slightly. And then what we'll do, because there's no questions, again, anyone that's watching a recording of this, if you're in a lot of the UK clients can't attend these webinars. So again, apologies, guys, in the UK, just type questions. I am clued up with the UK system as well. But the main thing is this, guys, everything that you put through a PT business, whether you're subcontracting or rental trainer in a gym, which 90% of you guys are here, or whether you're like Cam, who again is in that similar position with a bit of a different structure. You're like Ryan, who's working from a studio, whatever, right? You guys make your money first. You pay your tax to the ATO or the tax authorities last. As you can see, there's people here that haven't paid tax in a long time. I don't see anyone coming for your business, right? It's completely fine. But make sure, guys, as well, that you're aware that at near enough everything that you buy, everything you buy on a day-to-day basis, we are in a very good industry for claiming. So you should not be worried about tax. They should be paying you, in summary. And it's that simple. As things do go up and they continue, you will find that things get technical and you need to spend money before you give it away. But that's a good thing. That's why we set up multiple income streams. And you write things off. You need to spend money rather than giving it away. And you'll know when this happens in your business. We'll get to you in a sec, Tash. Basically, when you've got a tax bill, or you know that you are going to be getting a tax bill, would you rather pump that money into further growth, which is again write-off because it's a business expense, or just give it to the ATO? Have you ever seen people that like buy cars through like their business, or they like might set something up, or they like once a year they'll do it? Like construction companies do this a lot. They'll buy fleets of vehicles because it's all tax write-off. And that's why they do it. And they upgrade these vehicles all the time. It's basically spending their money so they don't have to give it to the tax authorities. And that's what you want to do. Yes, Tash.
Hey, Simon.
Hello.
Yeah, question. So, like, well, this is all really, really new to me. Obviously, like some of the guys on this call.
Yep.
So, all my direct debits and stuff from my payment system, it goes into the account, and then obviously my business payments come out, and then I pull out bits and pieces. What's the best way to sort of structure as far as, because when I eventually obviously start to do my my taxation for this year and stuff like that. Is this distinguish between what's business and then obviously, because I've got to pay rent and bits and pieces, so all my incomes goes into that account and then I separate out to whatever. What's the best way, or what's another way of doing it?
Yeah, the best way is this. So every single person here will have an ABN if you're in Australia. Otherwise, you'll be registered to whatever you guys need to be wherever you are, in the UK, in the States, Europe, wherever you're watching this on record or whatever. From there, you're going to have a bank account which is attached to that. That's a business transaction account. I recommend you have a business transaction account. You then have a business savings account as well. It's up to you whether you have a holding account for tax and GST. But I would probably just, I mean, not still, but over the years, I've just condensed it down to 2 accounts. So a holding account and a transactional account. That transactional account, you pay yourself a wage from, right? So you'll end up doing a individual return for your tax, and then you'll do a ABN or a company return. So there'll be 2 tax returns that you guys will end up doing. Your company return, it's all going to be done on what you pay yourself, right? And then the rest of it is what's in the business account. So you pay yourself from the business account into your personal bank account. I highly recommend that you each pay yourself a wage from that account. I recommend that the wage is no more than 1,700 per week. 1,300 is the recommended amount, but if you want more, you can go up to 1,700. What that is a sum that after tax equates, or no, when you chuck your tax on top of it, it's $120,000 a year. The reason why we cap it at that is because when you go over that amount, it goes from 27.5% tax bracket into a 40% bracket. You don't want to be in that bracket. All right. Ideally, you don't want to be, or you want to avoid it for as long as possible. All of the tax or all of the transactions in that business account, that's where your accountant will do your tax return from. That's where, again, if you've got receipts, they'll all be related. They'll be related to transactions in that account. So run everything through a business account. And then each week, what I recommend you do, don't hold profits in there, funnel your profits out into another account so that you don't have anything. So like your direct debit, which is from the gym, right? You might have a gym membership at a different gym if you like to get out and train, in a different gym. All the direct debits from that business account, which is all for write-off. So for me here in Brisbane, when I eat this afternoon, it will be through the company account because it's a business expense because I'm here on business, right? To eat, and I need to eat food. That will go through that account. All of those things will go through your Xero accounting software, which will be delegated into different areas. It's completely separate to your income, that 1,300, maximum 17, which is paid into your personal account. Does that first and foremost make sense, Tash, that breakdown? So business account, personal account, holdings account?
Yeah, at the moment, like I said, at the moment, it gives me a bit of an idea. At the moment, I'm not being able to obviously do the pay my wage because everything's going in and then I just pull out. But I'm at that point where I eventually want to get to that point where it's, okay, well, now how do I separate this? Because obviously my income at the moment is what's my clients are paying me and whatever. So I'm just trying to work out how I streamline it to sort of make it a little bit more simplified as far as moving forward and that sort of thing.
I get it. I get it. Just hands up here if you pay yourself from your business willy-nilly, if you know what I'm saying. So when you need a few hundred, you'll take a few hundred. When you need an extra 100, you take that. So show of hands, who does that, please, if you don't mind? Okay, so there's a few, right? I'd highly recommend. So do you pay yourself a set amount every week then, Tash? Is that what you're doing? No.
No, mainly it's just mainly it's more just expense like obviously residential rent, bills. Yeah, that's pretty much, yeah.
Okay, cool. So you've got to, what I recommend you do, guys, is incrementally pay yourself a set amount. So if you're making, if you're at the start of your business journey and you're making 50K per annum, $1,000 a week, what I would recommend that you do is I would pay yourself a flat rate of say $400 or $500 a week. That goes from your business account into your personal account. All right. And you've got 2 people in your household and you're both making that amount of money. That's great. All right. Leave yourself, you'll have $1,000 a week coming into your personal accounts. That enables you to do whatever you want. That's whatever you need. And what I say to people, like for me, I take a $1,300 a week drawing from my company. That is more than enough money. Like unless you do have a Chanel spending habit, like it's a lot of money to play with, right? Like you don't need that amount of money to live. So the rest of the money then, if you're making 1,000, you pay yourself 500 in your company account. Then you've got your rent that comes off that, your phone bill and your fuel, say. If you're finding that you can get by on that, again, do not worry. Notice how I haven't said tax and GST. It's not important at that amount of money you're making. If you then go and sign up 3 gold packages and your income goes up to 1,500 the next week, what I recommend that you do is you then pay yourself 700. You keep doing this incrementally. So you're going to pay yourself a wage and you've got your business income, right? When that goes up, you catch this up. That goes up, you catch this up, and you cap this at 1,300 a week. Or if you want the money, you can do it at maximum of it works out to be $1,700 after tax, which goes into your personal account, which means that you're not going into the 40% tax bracket. So chase incrementally as you make more money, chase the amount that you pay yourself with the money that goes up in the company, but cap it at 30 or 1,700. Does that make sense?
Yep.
And that's what I would do for every single person here. Like, get yourself into a habit. And I've spoken about this with Aaron before, brother. I mean, we've discussed this multiple times, right? Like, get yourself into a habit of paying yourself a set amount. I'm super OCD. I like things to be across the board. I like it to be nice and neat, but it's very healthy to do that, and it makes for easy accounting too. Tarks, have you got a question?
Yeah. So basically, at the moment, I've just got like the one account. I've got like transaction account.
Yeah.
That I've been running everything out of, and then for my business savings account, when I get my tax return, everything just goes into there. So I haven't been actually like separating business profits because everything's been able to run off the transaction account.
Yeah, are you using your business debit card to buy personal expenses?
No.
So
I'm running everything through the business. You're
running so look, me and you go out and we go get pizza, we go to cinema later and have a beer. Is that?
It's through that's through there. Yeah, through the business.
Okay, be careful with that. Because that's Aaron, I think that's what we discussed happening, right, with your old accountant, right? And this is what can screw you, right? This is why, and I've coached people before, it's really important stuff, this guys, people that make like 5 to 10K and have per week and have no money. You can't be in that situation. It's not good. And a lot of the time it's because it's mismanagement. Like financial discipline and financial management is something that not everyone's blessed with. But at the end of the day, it's very easy to stay on top of. Tarks, you need to be draining cash. When I say draining, you need to be paying yourself a set amount each week from the company holdings account into a personal bank account. And then that's where you build up your personal savings. All right. And then from there, like in the future, you want to go property, you want to go other investments. And that's what myself and my wife do. Like we do that all through tax paid profit. Right. I'm only going to take this because it is the accountant. So 1 second. David, I'm on a webinar talking about you with about 20 people, 30 people in the background, mate. They're all listening. So I'll call you back. Is that all right? All right, mate. Cheers, mate. So that's the accountant if you need it. Yeah, hopefully that makes sense. Like drain from the account, don't spend from that. What you'll then find is if you go and buy, I wouldn't say protein bar, but if you go and buy something that's non-related, right? I don't know, you take your kids out to something, right? Something that's not related or claimable, right? Through the company, you'll pay, like it complicates things and it screws things. right? So
because David, I'd been like talking to David all the time about it. He just like run everything through the business, and then the bookkeeper messages and just clarifies with what the payment, what it was essentially, and I just tell them.
Yeah, so everything in your bookkeeping though, right? So they manage your zero for you. So David's good. He'll know, he knows what to do. Obviously, he knows more than me, but like I only know this stuff through having multiple accountants and being burnt a lot of times. If you do it that way, like you'll find that there's a lot of mess that they'll try and clean up, that a lot of it you just won't be able to claim or anything like that, and you can't really designate it. But again, like I have said, we are blessed. We're in an industry where you can claim so much. So I would, again, Tarks, if the business is making, say, 4 to 5K per week, I'd be taking $1,000 a week and putting it into your personal account. What I'd then be doing, because you don't need $1,000 to live.
Yeah, that's what I do. I literally just transfer myself 1,000. Yeah.
Okay, good. So do that. And that's your set amount. So the business is making 4 to 5, you take 1,000. Right?
Yeah.
And the business does 5 to 6, give yourself a $300 a week rise. You're not going to need the extra 300. A lot of people think, well, why I need to pay more money to myself? I don't need it, because you shouldn't be spending $1,000 a week, right? You shouldn't be. So what do you do with it? Well, you save it, right? So you have then your personal savings account. So we talk about a business account and a business holdings, personal account, personal holdings. Then when you want to go buy a house for your family, you need a $30,000 deposit. There it is. It's on the side there. That's the savings account that you do personal money, which is tax paid by the company. And that's how it works. Hopefully that makes sense.
When you get to that stage of like being able to say like finance a car through the business account.
Yes.
Would you be doing that straight away in the sense of like selling your personal car to get money to put towards a house or something like that?
That's a good question. The answer, that's my man right there with his thinking hat on. Dude, if you've got a car that's worth 15K and you can sell it for 15K, sell it. Finance a vehicle loan. And if you need help with that, brother, if anyone ever needs loans or stuff like that, could get business loans for plant and machinery for 2.6% interest. It's unheard of. It's lower than house repayments. If you need anything, just let me know. Basically, what you do is you sell that, you make 15K, put that in there. That's your deposit, and then just go finance one. So my car is all financed through the company.
Yeah,
100% of the repayments come from the company, all of it.
I think you need a year's worth of the business being in business though. So that's what my problem was last time. So I just bought the car outright, and he said, "Come back to me in 3 months, and we can sell that car and finance the new car."
There you go, 100%.
Yeah.
I mean, look, this is something as well where, again, I use the example, guys, in the construction industry where people buy fleets of vehicles. Like it's all for write-off. I don't recommend you go out there and buy an expensive car. Personally, I've been there and done it, and it's cool, but like at the end of the day, it's a big expense, and it just depreciates. Like it doesn't appreciate. You've like, as long as you can get from A to B. I still have a $2,000 runaround car that I still love driving. And then I have other nicer cars and the missus cars that I look at and go, fuck's sake, this thing costs a lot of money. You know, I just wouldn't, but it's one of these things. You need to treat yourself if that's what you want to do. You work hard. Everyone here works hard. Treat yourself and enjoy it. It's that simple, but money could be put into better things than cars in my experience. But yeah.
I have a question, Simon.
Yes, Ray, yes.
Not as interesting as that. So last week you said with our Pay Smart direct debits, when we set them up, make sure that the client is paying all the fees. So when I've set mine up, I've been paying the fees. Am I able to claim those that I've set up?
Everything. It's all, everything. Well, think about it like this. I've never actually come across this before. So if there's $1.30 roughly, so I use PaySmart. With PaySmart, they're about $1.30 per transaction. If you've paid that, no, you can't, because if you're making, let's say, $2,000 a week and you have to pay $20 in transactional fees, right? So you've got silvers, $1 each, right? $20 a week. That's going to be deducted from your pay before it hits your account.
Yes. Okay.
So you're screwed. So you're losing $20 a week straight up. You can't claim it because it's gone, right? So who do you use? What's your provider?
PaySmart.
Yeah, use PaySmart
They
as well.
don't pay sure what, yeah, pay smart.
PaySmart or Pay Advantage or something like that. Anyway, like, look, I would, there's a box in PaySmart. If you go into your web portal, on the right-hand side, there's a little globe icon. You can customize your packages in there. There's a box inside there which you select, which says customer pays the fees. From now on, like today, go into there and click that button. As we discussed last week, I mean, it's one of these things where I think we were discussing the NUI software last week, wasn't it? I think.
Yes.
Yeah, and like the fees are a bit more expensive. So therefore, again, it's a third-party payment management provider. They have their fees attached to them, so the clients pay those fees. Yeah.
Okay, I'll go and change that. And then before, like if you work at another gym, can you claim that?
100%. Yeah, I have 3 memberships for some stupid reason. And I don't like, just that's it.
So you can claim them all. That's why you got 3.
Yeah, it's freaking stupid. I don't even use any of them half the time. So anyway, it's one of those. It's one of them. But yeah, definitely. I mean, think about it like this as well, guys. Like, I mean, I have 3 because my wife uses one and I have 2, but like, think about it like that. If you've got a partner and you want to start spending money, you want to say, don't touch any of the money that you've paid tax on, right? So don't touch that money. So the worst thing you could do is pay yourself the $1,000 a week, like Tarkin, right? And then from that, you pay for fuel, you pay for gym memberships, and you pay for, Rebel. You go to Rebel and buy some hoodies or something. The worst thing you could do is that, because it's all tax deductible. The business pays for all that. Tap your business card, not your personal one. And your personal card, ideally, don't tap that too much and save all of that cash, because that's what will take you up the ladder in terms of progressment. Have you got a question there, Claire, as well? I can't hear you.
Can you hear me?
That's it.
Can you hear me now?
That's better. Yeah.
Can we quickly talk cash?
Yeah, of course we can. Everyone loves talking about cash.
So you might remember, like, I had a girl a few months when we first started. Yeah, she wanted to pay upfront, and you recommended don't take it unless it's going to be at least 1,500 or of that. So that's basically what we did. I've sort of come to the end of that little kiddie pool, and I was using cash to pay for my coach because that's how he wanted to be paid. So obviously, I can't obviously claim any of that. You can get an invoice from him or a receipt, but he won't want to give you it if he wants to be paid. Oh, he said he would.
Oh, okay, cool.
He actually said he'll write me invoices for cash payments prior to we began if I wanted. I said no, just from when we started. Yeah, I don't want to be dishonest. So.
Yeah. Okay, no, that's cool. Yeah, you can claim that. Just use the invoice and then you just claim it. Paid for in cash. Paid for.
So I have a couple of elderly clients.
Yeah.
Who like to pay cash.
Yep.
So is there sort of like a weekly amount of sort of cash that's kind of glittering about that, or is it they're not going to come like trying to hit me up for like a couple of $100 a week in cash?
Yeah,
but that's all I'm stressing about.
Oh no. Don't worry at all about taking cash and that someone's going to watch you from the bushes with binoculars thinking with ATO printed on the right. Trust me, like.
Alrighty. I'm from a poor northern background, so I'm always like so dodgy.
Yeah, no. You're okay. I was gonna say poor, but no, I have northern friends. I don't know whether they're poor or not, but yeah.
You're just tight and scared.
Yeah, a guy from Grimsby. It reminds me of him. Yeah.
Right,
but no, never. But here's the thing though, like anything that you can pay for, which is a business expense, put it through the company and write it off as tax. That's it. And again, it's really is that simple. And guys, we are in a situation where we're in the fitness industry. We are in one of the best industries to claim. So claim. But any of your accountants say you can't claim that, they're just scared as well. And not as well, but they're just scared, right? Like you cannot, just be really careful with people that say, I need receipts, I need this, I need all that. I've had so many of these clients over the years, and I know that they're always stressed and upset at tax time because they actually have to pay money. Shouldn't be having to pay very much money at all. If you're doing under 100K per annum, I would not ever be stressing about tax. The worst it's going to be is going to be a few grand a year if you've got the right accountant. So yeah.
Got another one for you, Simon.
Yes, Clint.
It's a little bit it's on the topic, but anyway, because we're running the business through Claire and I, with child maintenance, will I be having to claim for what we're both earning together?
This is
Do you know that?
This is a rabbit.
Yeah.
I know how it works. I know how it works. So look, household income, your rebates from childcare centres and your grants that you get are based on household income. Is that am I on the right topic here?
No, you're talking about child support.
Oh, child support.
Oh, child support, not childcare. Okay.
So basically, does your wife get money?
Yeah,
off us?
does my ex-wife, she's going to get the money from both of us, or will it just be me? And look, I'm happy to pay for. It would be nice if I was allowed to see my son. That would be okay.
That would be great.
Yeah.
Honestly, I have no idea, man. I have no idea.
Yeah, no,
department. No, I have no idea because I haven't been through it. Unfortunately, well, not unfortunately, but I haven't been through it. Fortunately.
Yeah, maybe it's more of a question for the new accountant.
Yeah, ask Dave. He'll know.
Yeah. All right. Thanks,
It'll be
mate.
based off your own income, not your company income. It'll be based off your personal income.
It's That's correct.
I agree.
This is yes. There you go. So Nathan, Michael, very well said. Very well.
My wife, her ex-husband, there's a lot of up and downs and whatnot, but yeah, they've gone through all the loopholes, and it's the personal income, and that's how it's digressed, because he would have a go at my wife because obviously I earn more than him, and he's just like, oh, I should pay less because they earn a lot more than me. Well, he earns more, and they worked out, no, it's personal stuff. It's just between her and him, nothing to do with me. So I was just like, take that.
There you go.
100. So unfortunately, it's personal income, not as a combined.
Personal. And you can choose your personal income, right? That's the benefit of running companies and being self-employed. You can choose. I purposely make myself look poor on paper because we can. It's that simple. But your company, your income generating asset is where the cash flow is. So yeah, hopefully that helps. All right, people, what are we looking at? All right, we're on the money again to the minute. Let's jump across everyone here, I think. Yeah, everyone, it's all clients marketing loop time. We've got another new strategy. We're going to discuss the last strategy. Denise, I'm going to send you this link if you guys want to come and just sit and listen to this stuff. This is the value stuff now, but that was valuable. Again, any other questions that you've got about accounting, let me know. It's again, in summary, guys, the ATO and the tax authorities get paid last. Don't stress. It's that simple. Just keep growing your business and eventually you can pay them. That's my long-winded short answer. And that's it. Jade, I can send you the link as well. I tell you what, I'll put the link in the marketing chat and I'll add you to that chat to Denise and Mark and Jade. I'll see you in 2 seconds.